next standard that we'll be starting with is IND AS 40 that talks about the investment property. Investment property. So basically investment property means what? Investment property is either a land or a building which you are owning. For what purpose? To either earn some rental income or for capital appreciation. You purchased a land or a building, you have rented it out to get some rental income, or you are holding it with an intention that its value will increase in future, where you can sell off and make some money. So such properties, such land and building, we call it as investment property. And it's not necessary to own them, even if you have got it as a lessee, because we have studied IND AS 116, right? So if you are a lessee, means you have to recognize ROU asset, right? So if this land and building, if lessee is holding and if he has subleased it on an operating lease, so even then it could be considered as an investment property itself. So primarily you own, but it could also come as a lease ROU asset also. That's one. All right. That's the meaning of investment property. This particular standard is not applicable for biological assets and exploration assets. That's all right. Okay. So the first thing you need to know is the meaning here. So we already saw the definition of PP. PP means what's a tangible asset held for use. The usage could be either to produce goods or rendering service or administrative purpose or rental purpose. Sir, if you are using a property with an intention to produce goods or render service or administrative purpose, such property we call it as owner occupied property, and for such owner occupied property IND AS 16 applies. So if you are using the product for your business purpose to either produce some goods, render service or administrative purpose, then it is not investment property. We call that as investment property. In the balance sheet you show it as PP only. Okay, but here you refer to that as owner occupied property or OOP. And IND AS 16 will apply. Suppose you are rented out the same property we are holding that property with an intention to earn some rental income or for capital appreciation purpose. Then such property we call it as IP and IND AS 40 shall apply. That's a primary distinction. So if you're using it for business purpose, you have to apply IND AS 16. If you're using it for rental or capital appreciation purpose, then only it will come here. Okay, that is one. And if you are owning this property to be sold in the ordinary course of business, you own a land and building, right? But selling land and selling building and all is part and parcel of your business. Okay, that is your normal course of business. If you sell it, then it is not investment property. Then IND AS 2 inventory standard will get triggered for such a standard. Okay, then again it is not an investment property. Okay, OOP is not investment property. OOP ka full form is owner occupied property. IND AS 16 will apply for owner occupied property. Then we have seen many organizations, they'll have a property. They will give it to their employees, either on rent or whatever, at a concession rent or whatever. So if there is an employee occupied property, business owns it, but it is given off to employee. Even in such case, it is not an investment property, because giving something to employees is your business tactics or your business decision. Okay, so that means it is not an investment property. Still, IND AS 16 only, it applies to such a employee occupied property. Okay, and if a property is held for sale, you own a property, but the moment if it is classified as held for sale, then IND AS 105 will apply. Okay, IND AS 105 talks about properties held for sale, so it is not an investment property also. And if you have leased a property, I already told that land and building need not be owned. Even if you are holding ROU asset as a lessee, if you have subleased it, then also it could be an investment property. But if you have subleased on a finance lease, if a property is given on finance lease, we have already studied in 116. What is that? If a property is given on finance lease, then lessor has to de-recognize the asset. Asset cannot be shown in books. If asset itself is not there, means where is the question of investment property? Yes or no? Okay, so in these cases, it is not an investment property. If you're selling in the ordinary course of business, not IP. If you're using it for business purpose, meaning to produce goods, render service or administrative purpose, not an IP. It becomes owner occupied property and IND AS 16 applies. If a property is occupied by employees, then also IND AS 16 only will apply. If it is classified as held for sale, then it is not an investment property. IND AS 105 will apply. Then if you have given it on finance lease, you are a lessee, but if you have given it on finance lease, then also it is not an investment property. Okay, so basically that property which you are holding to earn only rentals or capital appreciation is IP. That's one. Next is, if property is held for more than one purpose, what to do, sir? So like there is a building. Building has two floors, ground floor and first floor. Ground floor is used for business purpose. First floor is let out, meaning it is let out for rental purpose. In this case, what to do? Meaning the same building, it is used for more than one purpose. Ground floor is used for business. In my example, first floor is used for rental purpose. In this case, what to do, sir? So if property is held for more than one purpose, check. Can this property be sold separately, or can it be given on finance lease separately? Meaning, can you sell ground floor and first floor separately? You need to check. Okay, or if you can't sell it, at least check if you can give ground floor and first floor separately on a finance lease. If the answer to any of this is a yes, either you can sell it or give it on finance lease. If the answer to this is yes, then this ground floor which you have used for business purpose will be termed as owner occupied property, and IND AS 16 will apply. For your ground floor, IND AS 16 will apply. For your rental purpose, the first floor which you are holding, it will be investment property, and IND AS 40 shall apply. Like that. If you can separate it, then separate it. For that portion, apply respective standards. That is the portion. Sir, if you cannot separate it, so give us an example. Sir, we have only one floor. Okay, let's say this is 1000 square foot ka one floor space. In this, let's say 970 square foot is let out, sir. 970 square foot is let out. One small room with about 30 square foot is used as a storage facility for business. Business has certain goods, no? You put it in this particular room. Okay, that means now is it two separate assets? No, only one floor of a building used for multiple purpose. Same answer. See if you can sell this asset separately. Most probably no. Yeah, the one room who will sell. Can you give it on finance lease separately? Most probably no. Okay, so the answer to this is no. If you cannot sell it or give it on finance lease separately, then you need to check is usage for business purpose. Is the usage for business purpose means is usage for producing goods, rendering service, or administrative purpose. Is that usage for business purpose significant? What is significant? They have not defined. You have to use a judgment call there. Okay, if this usage for business purpose, if it is significant, then entire property will be classified as owner occupied property, and IND AS 16 only will apply for it. However, if you conclude the usage for business purpose is not significant, only minimal, insignificant portion is used for business purpose, then the entire property will be classified as IP, and IND AS 40 shall apply for the entire property, not segregation. Entire property, this is the rule. Okay. All right. All this can be easily asked as a case study question. Okay. Just watch out for this. All right. So the next one is service. Sir, if you're giving any service, what to do? Like if you just check the hotel industry, like hotel also, what is hotel ka main business? They rent out the room. Yes, they have a building. The building has many rooms. The rooms they rent out. That means, is that building investment property, sir? No. So because here when it comes to hotel business, no, are they only letting out the room or are they giving service? They're giving extra service also. That is what we're talking about. So if some extra service is given, you need to check what do you need to check? Is the service provided significant? If the service provided material, like in case of hotel business and all, they just don't let out the room. They give other significant service, like you can have food, they give food service, they give laundry service. Yes, you can access gym, you can have clubhouse. They give you 101 services, correct or no? Right? That means the service provided in case of a hotel or a hostel business, no, is significant. In case of a hostel or a hotel business, the service provided is significant. So if you're providing the service which is significant, then the entire property will be classified as OOP, and IND AS 16 shall apply because the service portion is your main business. Okay, your main business is that. All right, so entire property will be classified as OOP itself, and IND AS 16 apply. However, if the service provided is insignificant portion, let's say there is a building, okay, we let it out. Along with our let out, we told our tenants, we'll also give you maintenance service. We have appointed a security guard. Okay, we have appointed a security guard. We have let out the property and we have appointed a service guard, a security. We're giving some security service. So all those what? They are your routine services, right? They are not your significant service. So if the service portion is not significant, then the entire property will be classified as investment property. Then IND AS 40 shall apply to that particular portion. Okay, so that's about service. If property is let out with some service, what to do? This is the guidance. Okay, all right. Now the transfers. If you're transferring from investment property to owner occupied property, let's say there's an investment property, okay, which you had let out. Now you want to stop letting it out. Now you want to use that for a business purpose. Till now you were letting it out. Now you don't want to let it out anymore, but you want to use it for your business. So since you were letting it out till now, the classification of that property was IP. Now you henceforth you want to use it for your own business purpose to provide goods or renting service or administrative purpose. That means now the classification should be OOP. So if you're moving from IP to OOP or other way around, from OOP to IP or from IP to inventory, till now you are letting out the property. Now you decided that let's make this as a business itself. Okay, right? Let's sell this building. Like building you were letting it out. Now you thought you'll buy and sell the building. That line of business you want to get into. So if you're buying and selling building, that means the building becomes your inventory. So till now your classification was IP. Now the classification has to be changed to inventory. So if you're moving from IP to inventory or inventory to IP, doesn't matter. Whatever combination you're working or you're jumping to, doesn't matter. The transfer has to be made at carrying amount itself. Meaning, let's say the investment property was carried in the books at 10 lakh. Okay. Now, can you show it as investment property anymore? No, you have to show it as owner occupied property. Owner occupied property also will be shown at 10 lakh only. Meaning the transfer from one region to another region will be made only at carrying amount. Meaning no profit or loss on transfer shall be accounted because you have not sold the property. This is just a reclassification. So no gain or loss will be accounted in case of reclassification. That's all you need to remember. Okay. All right. So in terms of the others, there's a significant overlap between IND AS 16 and IND AS 40. In terms of cost inclusion, subsequent cost, etc., depreciation, all these are same as IND AS 16 itself, except one thing. IND AS 16 said initially all PPEs are recorded at cost. Subsequently, either you can follow cost model or revaluation model. But for investment property, only cost model is allowed. Initially, it is measured at cost. Subsequently, also it is measured at cost only. Only cost model is allowed. Fair value model is not allowed, but fair value is only to be disclosed. For investment property, fair value model, you cannot adopt it. Maybe because India is an emerging market, no? The value of this fair value of this investment property fluctuates too much. So they thought that it will hit the P&L in a big way. That's the reason India has taken a stand. IFRS, actually, if you just check IFRS, they allow both cost model and investment property for fair value model for investment property. But IND AS allows only cost model. And we are writing CA Indian exam. So in our exam, we'll say only cost model is allowed for investment property. Fair value model is not allowed. Fair value of investment property only to be disclosed. This is only for disclosure. So what about disclosure? Sir, you need to check. If investment property is under construction, you're planning to construct a building and then after construction, you want to let it out. So there's an investment property. So if the investment property is under construction, standard says disclose fair value only if it is available because the property is not yet constructed. No. So to find out fair value for such properties, it may be a difficult task. Hence the standard is given a leeway. If you want to disclose fair value, disclose it because it is still under construction. But 1 year if you disclose, then till the investment property is sold, you have to compulsorily disclose. You cannot escape from it. Okay. Let's say construction takes about 5 years. Second year, you disclosed fair value of this investment property. That means all the years henceforth, you have to compulsorily disclose investment property till it is sold. However, if the investment property is already completed or if it is a purchased investment property, already completed property you purchased or construction activity is already completed. If that is the case, means standard says fair value of such property has to be compulsorily disclosed. If you feel you cannot find out the fair value, you need to disclose it in notes to account just to why you cannot find out the fair value. The justification has to be given. So this is about fair value disclosure. Okay, sir. So that's all is about this. So this is not really accounting wise, it's not really a different standard. It is the same. Whatever you have done in IND AS 16, more or less you'll have to follow the same thing over here also. But do keep in mind only cost model is allowed for investment property. That's all. Okay. Yeah. So that's all with respect to investment property, a small standard. So let's run through a few questions. The standalone questions on these topics are a little less. So they'll make a case study like this with multiple standards like IND AS 16, 38, 40. They'll collate maybe and form one case study question. Those are probably a lot more popular. Or if they want, they can ask it 2-marker wala MCQ question. That is basically how the question is asked. That is ICI or mother body ka choice. Let's not worry about that. Let's worry more about our preparation side of things. So let's be pakka in that. Okay. Star is a multinational entity that owns 3 properties. All the 3 properties were purchased on 1st April 2016. The details of the purchase price and market value they've given, sir. Purchase price is this, market value. You have purchased on 1st April 2016. Keep that in mind. Market value they've given on 31st March 2017. Okay. Life is 10 years. They followed cost model. This is a factory. Obviously, if you're using it as factory means what should be the classification of this? Factory is obviously used to produce some goods, rendering service or administrative purpose. That means this has to be what? OOP and IND AS 16 shall apply for it. Even this also for factory, so OOP should apply. Property number 3 is let out. So let out property only we call it as what, sir? IP, investment property. So 2 are owner occupied property, 1 is IP. Okay. For factory number 2, they followed revaluation model. Why? Sir, for one factory they're following cost model, second factory they're following revaluation model. We know the rules of revaluation. No? If you want to follow revaluation model, you have to follow it for entire class of asset. Yes. So here, if they don't give any justification, if they give you 2 factory, in exam will always assume that both the factories have similar nature and characteristics. That means what? Can you follow different models for them? No. For both of them, either you have to follow cost model or for both of them, either you have to go for revaluation model. You can't do partiality one among them. And investment property check, they followed revaluation model. Is this acceptable? That is also not acceptable because investment properties are to be only valued under cost model. Okay. Property 1 and 2 are occupied by stars whilst property 3 is let out. Okay. The management represents all the 3 properties in balance sheet. Management presents all the 3 properties in balance sheet as PP. All the 3 they've together shown under PP. That is also wrong. Classification is wrong because property, plant and equipment. When you say property, plant and equipment, we're talking about owner occupied property. PP has to be shown separately Under non-current assets itself, the main category is non-current assets. Under that, property, plant and equipment, which you are using it for business purpose, has to be shown separately. Investment property, you have to show it separately. They have to be disclosed separately. You can't club them and show them as PP. Okay, these two you can club and show. That's not a problem because anyway they're used for business purpose. These two can be clubbed and shown under PP. This one cannot be shown. It needs to be disclosed separately. That means their classification done is also wrong. The company does not depreciate the property on the basis that fair value or exceeding the carrying amount. Oh, they are saying fair value is greater than carrying amount, so we will not depreciate. Right? No, sir. Depreciation ka simple rule is what? One DA should be positive. Another one is useful life should be unlimited. Yes, useful life should be limited rather. Yes. Sir, if fair value can be greater than carrying amount, still depreciation you will do. Yes, today only we discussed this. Yes. However, if recoverable amount is greater than or equal to carrying amount, then the depreciation will be no. So for depreciation purpose, we don't worry about fair value. We only worry about recoverable, or rather recoverable amount. What is this? Residual value. My bad. Yeah. Maybe too much support for me. Yeah. Some other words and all is coming up. If the residual value, if it is greater than or equal to carrying amount, then only depreciation is nil. Because in that case, DA will be 0. Yes. Or it may become negative also. That is the reason. Okay. What is that name? Evaluate whether the accounting policy is adopted as right or wrong. So this came in May 2018 for about 10 marks. So you just need to write some stories. Okay, this and this and that. What is the classification? Is classification right or no? PP has to be shown separately. Investment property has to be shown separately. So that means the classification aspect is wrong. That is one you will write. Okay. Then when it comes to valuation, for these two properties, can you follow different model? No. Since both are PP, both looks factory. For both of them, either you should go for cost model or both of them you should go for revaluation model. That is a drama you will write. Okay. All right. Next will be what? The third, and you're also right for investment property. They have followed fair value model. Is that acceptable? No, you have to follow only cost model. You can't follow revaluation model. That also you will bring it in there. Now, when it comes to the treatment of depreciation, what is the company doing? They are not depreciating. Is that right? No. They have to depreciate. What will be the depreciation amount also you can call out. You purchased it for 30,000. Useful life is 10 years. Residual value not told anything. So the depreciation has to be calculated. Okay. So you have to for all the assets, you have to calculate depreciation. That you will write. And then you can give a disclosure as balance. You can prepare a simple balance sheet extract and P&L extract also if you want. Now here you can answer in two cases because we don't know. One they give cost model, one we can give revaluation model. So we can give a subjective answer. If both the assets, if they had followed cost model, what will be their value? Or if both the assets were followed under revaluation model, what would be what will be the value? Like that you can give a disclosure. So in the first case, if you have followed cost model for both, then what do you think? You purchase the asset for 30,000. The depreciation will be how much? 30,000 minus salvage value 0 divided by 10. So the depreciation will be 3,000. That means the carrying amount will be 27,000 for PP1. The main category is PP. Main category is non-current assets. Under that PP, you will show property 1 as 27,000 after depreciation. What is the depreciation for property 2? 20,000 divided by 10. So that is 2,000. So 20,000 minus 2,000 will be 18,000 will be the value of property number 2. So total PP that will come in balance sheet is 45,000 in this case. Investment property, the main category is non-current assets only, but you have to show it separately. Investment property also you need to show. First you need to depreciate, they have not done. So 24,000 divided by 10 years. So 2,400 is a depreciation. So 24,000 minus 2,400 will give you a value of 21,600. And fair value needs to be disclosed for investment property, which we told. So this is the case when property, plant and equipment is valued under cost model. All right. You can also follow another one called revaluation model. If revaluation model follow means what you have to do? One, sir. The carrying amount is, we can also write over here only. First is what? Property number 1 and property number 2. So the carrying amount, we got it over here only 27,000 and 18,000. And what is the fair value? Revaluation model means to show it at fair value. What is the fair value they told? 32,000 and 22,000. 32,000 and 22,000. If you're following revaluation model means you show the asset at fair value. So fair value of property number 1 is 32,000. Property number 2 is 22,000. Put together it is 34,000. Correct? That is the balance sheet value. But if you just compare carrying amount with fair value, there is a revaluation loss or revaluation gain. There's a revaluation gain. No? 27,000 is the carrying amount. Fair value is 32,000. So revaluation gain is 5,000 here and here it is 4,000. That means what is the total revaluation gain? 9,000. Where will the revaluation gain come under? The OCI, right? Yes. So under equity and liabilities, you have other equity. Under that, you have revaluation reserve 5 and 4. Total OCI 9,000. Okay. So you allow also one other than this, and revaluation surplus also will come in as an extra that you can call. So take a call based on the time that you have and basically decide based on the time that you have. Okay. This is what is expected. You have to write some little bit stories. Okay. Little provisions. No need to write too much masala and all. Okay. Just one line where you can write provision and write the things what they've done is right or what they've done is wrong. Okay. If you just comment on that, that should be good. Okay, people. All right. Next is question number 6. I think this is also a previous year paper question, I think. On April 2019, an entity purchased an office block of 50 lakh rupees and paid a non-refundable property tax and direct legal cost of 2.5 and 50,000 respectively. So this is your directly attributable cost. Can we add it? Yes. This also can be added. This also can be added. That means this will become 50, or we look at the solution only. 50 lakh, 2.5 and 50,000 they've added, and it has become 53 lakh. They've added. Okay. Then what? During the year 2000, during 19, same year only, the entity redeveloped the building into 2-storied building. So they have constructed this into 2-story building. Obviously, if you're constructing a building with a 2-storied building, you will incur some construction expenditure that they've given. 1 lakh for building approval. Can you add? Yes. These are all tax. Can you add 1 lakh? Yes. Then construction cost of 10 lakh. Can you add? Yes. But 60,000 is in this 10 lakh, including 60,000 refundable purchase tax. So non-refundable tax you can add, right? Refundable tax can you add? No. But this 10 lakh is includes the 60,000. Hence what we have to do? You have to either deduct 60,000 or only add a 9 lakh 40,000. From 10 lakh deduct 60,000, that will be 9 lakh 40,000. Add only that. Okay. All right. Next is what? 40,000 due to abnormal loss. Abnormal loss and all will be straight away going off to P&L. That cannot be added up. Okay. So that they have not added. All right. So that means the total redevelopment cost is adding all the 63 lakh 40,000. So mind you, this is not for 1 floor. This is for 2-storied building. So this is for 2 floors. Now what they're saying? When the redevelopment of building was completed on 1st October. So that means asset is available for use on 1st October. So that is important for us, because the moment asset is ready for use, you start depreciation. So depreciation starts from 1st October 2019. Keep that in mind. The entity rents out the ground floor. So this is the ground floor. This is the first floor. Ground floor they have let out. Sorry, let out means obviously this is an investment property. Okay. Okay, the entity rents out ground floor of the building to its subsidiary. Oh, not to a third party. Parent is constructing this building. They have let it out to subsidiary. Okay, that's a good question. Under operating lease. Okay, in return for rental payment. Subsidiary uses this building as a retail outlet for its product. Okay. Subsidiary further did not rent it out. Okay, they are using it for their business purpose. So parent let it out. Subsidiary is using for their business purpose. All right. The entity keep the first floor for its own administration. So first floor, they're using it for business purpose, administrative purpose. That's okay. That means this will be owner occupied property. So first floor, there is no drama. They have not let it out. They're using it for their business purpose. So owner occupied property, obviously. Equal value can be attributed to each floor. Yes. Totally, the value of this is 63 lakh 40,000. So they're saying equal value, 63 lakh 40,000. You have to divide among 2 floors. It means each floor ka value will be, where is it? Each floor ka value will be 31 lakh 70,000. Basically 63 lakh 40,000 divided by 2. Okay. All right. Now what is the requirement? How the entity will account for all this, they said, which we discussed. How to account the expense? You need to simply add or transfer to P&L, which we already discussed. Also discuss how the above building will be shown in consolidated financial statement. In CFS mein how will show entity as a group, and in SFS mein what you will do. Okay, they are asking the treatment in SFS as well as CFS. Okay, sir, SFS of the parent that they are asking, because parent doing is all this drama, no? So when you prepare separate financial statement or individual financial statement of parent, what to do? Simple. This is ground floor, this is first floor. What did the parent do? Now you don't have to worry about, when you're doing separate financial statement, you don't have to worry about CFS. Think only from parent perspective. What did the parent do? Ground floor they let out. So from parent perspective, they've let it out and they're earning rental income. Ground floor they've let it out. That means ground floor of 31 lakh 70,000 will be shown in their financial statement. In parent ka separate financial statement, ground floor will be shown as an investment property. And first floor they've used for the business purpose. So it is owner occupied property or PPE. So PPE will come in your balance sheet for 31 lakh 70,000. So in parent books, this is a classification. Okay. All right. So now when it comes to consolidated financial statement, now you need to think consolidated financial statement means it is not just parent, it is parent and subsidiary put together. Now, whenever you're preparing consolidated financial statement, no, this property you have to analyze from group perspective. This property, you cannot analyze it from parent perspective. You have to analyze it from group perspective. From the group perspective, you need to check how the building has been utilized. Though the parent has let out, to whom have they let it out to? Subsidiary. And what is subsidiary doing? They are using it for their business perspective. That means from the group perspective, if you think this particular ground floor, no sir, it is not really let out because subsidiary is still using it for their business purpose. That means this also will be classified as owner occupied property itself. Okay. Say, because from the group perspective, subsidiary is still using. Subsidiary is also part of the group, no? Okay, so from overall group perspective, this property is really not let out. Subsidiary is still using it for their business purpose. So this also OOP. First floor, there is no drama because parent is using for the business purpose. That means that also will be OOP. That is the drama. That's what you need to write over here. Okay, that's what conclusion finally they've given here. In separate financial statement, ground floor will be classified as IP and first floor will be classified as property, plant and equipment. However, in CFS, the entire property will be classified as the whole building will be classified as PP itself, meaning it will be classified as owner occupied property itself, and IND AS 16 only will apply. Okay, good question. All right, so yeah, this is some of the question relating to investment property. Thank you.